You're listening to AI Prism from Seoul Economic Daily.
KB Financial is days away from crossing 80% foreign ownership, an all-time high. 6 Korean card companies raised 830 billion won in bonds in a single session at rates above 4%. And a Korean blockchain startup is now running World Bank-funded agricultural payments for 95,000 farmers in Madagascar. That's a wide range for 1 week. The card company rush to market is the most urgent signal for anyone tracking the direction of Korean funding costs. It's Friday, June 12th. Let's break down what's happening in Korea's financial sector. Korea's financial system is running under 2 competing pressures. Foreign capital is concentrating into premium assets like KB Financial, while borrowing costs for mid-tier financial firms are rising as markets price in further rate hikes. The Bank of Korea has already signaled a potential rate increase in the second half of 2026, which explains why 6 card companies moved simultaneously on Thursday. Meanwhile, Korean fintech is moving outward, embedding blockchain infrastructure into African agricultural payment systems with World Bank backing. What's actually driving the card company rush? Here's what the numbers show. KB Financial's foreign ownership reached 79.89% on June 10th. An all-time high, driven by the cancellation of 14.26 million treasury shares on June 9th. Foreign shareholders are projected to receive roughly $2 billion of KB Financial's expected shareholder returns this year alone. For international compliance teams, that concentration matters immediately. At 80% foreign ownership, proxy advisory firms like ISS and Glass Lewis effectively control major governance votes, including CEO succession and compensation. 6 card companies, Woori, Hyundai, KB Kookmin, Shinhan, Samsung, and Lotte, raised a combined 830 billion won, approximately $580 million in a single day, at rates ranging from 3.97% for Woori Card to 4.89% for Lotte Card, which carries a lower credit rating, A- plus rated card debt at over 4%. That's the market pricing in a rate hike before the BOK announces one. That's a forward indicator. DSRV's Madagascar agricultural blockchain pilot reached 1,000 beneficiaries in the first half of 2026, funded by a $900,000 Korea World Bank grant, expanding to 95,000 farmers in the second half. Separately, Tether invested in German robotics firm Neura Robotics in a round of up to $1.4 billion, with Nvidia and Amazon also participating to integrate stablecoin payment rails into autonomous machines. The Tether-Neura deal is a different regulatory category than standard crypto transactions. Stablecoins as machine-to-machine payment infrastructure are outside most compliance frameworks right now. Seoul's KIIC Insurance Conference drew 1,300 professionals from 175 companies across 27 countries, a record attendance, with AI liability and autonomous vehicle risk as the central agenda. So what does this mean for analysts and compliance professionals tracking Korea's financial sector? Earlier we said card companies race to lock in funding before rates rise further. That urgency is a credible leading indicator that the BOK's next rate move is more likely up than down. Watch the Bank of Korea's July policy meeting for formal guidance. KB Financial's approach to 80% foreign ownership will intensify proxy advisor influence over governance decisions, a structural shift that foreign institutional investors should factor into their Korea financial sector exposure before the next shareholder meeting cycle. The combination of outbound fintech exports, rising domestic funding costs, and stablecoin infrastructure deals signals that the next compliance cycle for institutions with Korea operations will center on digital asset flows, not just traditional credit exposure. That's today's AI Prism, Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.